Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 13th of September. All right, I'll just jump straight into it. Basically, starting with the euro, right? So we've had the euro. They've come out with the expected quantitative easing that was expected, but the big surprise was Draghi's very strong comments, and the afterthought after the market was, that the market was disappointed with what their easing was. Well, if that's the case, why would they be buying? But that's what the market's sort of saying. So I'll come back, show you the news, look at the currency. So at the time of the release, or the rate decision and the quantitative easing, it was sitting around 110.30. It shot up very quickly to 110.60, 65. And then once it came out with a bit of easing, it dropped down to 110 very quickly, sat around 110, sort of 15.20, and then came the big push to the downside. Now, the press conference 45 minutes later, Draghi was talking about the positive implementation or the positive outcome from the easing, what that would cause, and that they were in for the long haul and would do whatever it takes. Okay, very similar to what the Fed was saying back in 07, 08 to get that economy going. So basically, we saw a massive short squeeze, right? So euro at the time, if I just come back to one of the trend lines I was looking to get back or get short back into, I was waiting for it to pop above this. The team here was sitting here waiting for an opportunity, coming back up, thinking, okay, that's it, and then down. It just kept on slowly going up and up and up until it sort of broke through those highs where we were earlier today. So really, to me, it was a massive market was short ahead of the release, squeezed up. We got the easing. It wasn't that much. Draghi talks it up, and we get the big squeeze to the top side. Now, if you do put this together with what the, some of the media outlets are sort of saying, like euro gains after ECB stimulus disappoints. All right, well, that doesn't sort of make a lot of sense, does it? So they were sort of hoping it was going to be more dovish, is what the general perception is. Well, you know what? I think Mario's come out. He's almost at the end of his tenure, and it's the best that he could do. And says, this is going to help everyone. But realistically, I think it shows that euro is actually in the doldrums, and it's going to get tricky from here. Now, for those Donald fans, Donald has been into it, right? So if I just, where is his picture here? Donald was straight on. I think he might have been. I don't know if he was on Twitter, but he's come straight out saying ECB action hit by Trump is hurting US export, ups the pressure on the Fed. He's sort of coming out saying that basically the ECB are undercutting the value of the US dollar and hurting US exports. So we've got to do something. And he wants the Fed to now go crazy and go negative and all sorts of stuff. So really, it shows his naivety with regards to global economics and managing the economy. I don't think he really cares too much about anything else except his popularity. Now, on the other front, the US coming to the table, talking about doing a deal with China. Trump, at the same time, US House panel votes to ramp up Trump impeachment probe, right? So he's got domestic problems. Usually that's where he starts the international tweeting. So just be careful. That could come up in the next few days. So just coming back to the major currency pairs, if I just bring you back to the MyFX Trading Hub, no major change here, right, in the euro. Long term still, it's just been a bit of a weird one. We'll see over the next 24 hours how the euro comes out of this. Sentiment, well, they've just put more quantitative easing, so it's bearish, even though they were trying to put a positive spin on it, right? So the rest of the currency pairs, still not great trading conditions, bit of a wait and see environment as far as I'm concerned. So when you do come back to have a look at the major currency pairs, they're missing the heartbeat, right? And we had US CPI numbers, which came out basically as expected. And that was an unfortunate thing because it left the Aussie sort of just dwindling, Kiwi sort of just lagging and sort of just starting to get a little bit loose on the downside. Dollar yen slowly tweaking to the top side. Well, euro with the ECB, a basket case, pretty much was as expected. Sterling hardly moved at all. And that's obviously to do with the Brexit issues that are still sort of putting it in hold at the moment. And dollar CAD, well, oil's back at $55, squeezing down. So you think that's going to slowly move dollar CAD to the top side, but there's no real levels around. So it's pretty hard to call. So all in all, not great opportunities right at the moment. If anything, though, if you are looking for a opportunity, if you have a look at the, sorry, I should have said the yen crosses, not dollar yen. I'll have to find that page. But the yen crosses do look like they have the best setups at the moment, so you may want to have a look at that. Now, if you'd managed to survive the ECB, and I would have encouraged you probably to sit on the sidelines and wait for it to pass. We do have a couple of releases coming up, but probably the main one being the US retail sales figures. You know, the CPI missed the mark. I don't expect a lot out of the retail sales. Employment figures were a week ago were pretty much, you know, a little bit weaker, but the rate was pretty good as expected. CPI as expected. Retail sales, you're going to think it's going to be as expected. So really, overall, the week has been a bit of a fizzer as we waited for the ECB, US CPI, and didn't get a hell of a lot out of it. All right, guys, that's it from me. Not too much to get excited about just at the moment. But for those traders who are planning on looking ahead, which you should sort of be doing coming into Friday's trading, there's a huge amount of data coming out. And we do have the Fed. Okay, that's going to be a huge, important release. As I said, employment CPI pretty much as expected. I don't see any changes. Trump will be putting a huge amount of pressure on them to cut again. We have the Bank of England also, and you've got the Swiss National Bank there as well. So there's plenty to play for, a couple more central banks, loads more intermediate to high impacting economic data. We need to get these currencies some sort of direction, right? Whether that's going to be through the US dollar or through the other pairs, we'll have to wait and see. But and that's where we are at the moment. It's a bit of a wait and see situation. Yen crosses are the best go. Check that out. And otherwise, have a good trading end of the trade week. Cheerio.